Hi, and welcome to another market recap. My name is Anna Serin. I am Director of Listings Development with the Canadian Securities Exchange, and I am joined by my co-host, Bruce Campbell with StoneCastle Investment Management. Thank you for joining me, Bruce.
Yeah, glad to be here on the last trading day of the month.
Last trading day of the month, and it's a cold one. I'm in a sweater today. I don't know what it's like in Kelowna. You always seem to get sun, so you're probably faring better than I am.
Sunny plus 25.
Oh, come on. I'm going to come up. We're going to do this together in person one day. When it's safe to do this in person, I'm going to drive up there and we'll do it together in person.
Outside.
It'll send our fans wild. Okay, there's lots that happened this week. So we're going to try and get through it all. So we're going to talk about the Federal Reserve in the US. There was some moves in commodities that we're going to talk about. It was a big week for earnings. Lots to break down there for earnings for companies. We're going to talk about that. One of our CSE issuers, GTII, Green Thumb Industries, Inc. They did an interesting debt package. We're going to talk about that. There was a movement in between exchanges with a cannabis issuer in Canada going to the US. We'll talk about that. And we're going to end off with a great story of the week, which is one of our CSE issuers has a new ambassador joining them, and it's a big name. We're super excited for them. So stay tuned to the end to hear who that's going to be. Okay, let's talk about the Federal Reserve. What happened?
Yeah, so the Fed had their meeting this week, and then they had the press conference afterwards. And I mean, one of the things that they talked about that we found very interesting is that, they often say that no one rings a bell in the markets, but they're kind of telling us that they're going to ring that bell when it comes time to taper off their purchases and when they're going to start changing interest rate policy. So as it is right now, it's staying the course. They said they're going to give us lots of time in advance to figure out when that's going to change. So that's probably a little bit new. I mean, one of the things that Powell's always talked about is being very transparent, and certainly that was the case. So they're just leaving everything as it is right now.
So what do you think, how will this affect inflation? Because I notice it here in Canada, and I know across the border it's an issue as well. What does this do for inflation?
Well, I mean, one of the, sort of the next topic we have is we can sort of integrate them as commodities, but certainly inflation is starting to rise up. And we have a chart here that was just up on the screen. There it is again, just showing you what this is looking at. This is the inflation protected securities versus the regular securities. These are bonds. And so when that line is moving up, it actually means that the market is seeing inflation in the economy. And so we've really seen that. If you look at the LEI announcement from last week, it was, we didn't touch on it last week, but it was all 10 of the segments were higher, which we haven't really seen before. We're seeing commodity prices all starting to move up. And so, with the Fed keeping their foot really on the gas, it means that we could probably end up seeing quite a bit of inflation before this is all said and done.
Yeah, it's a little nerve-wracking to see what's going to happen there. President Biden spoke this week too. He didn't seem to be showing a lot of love for Wall Street. So I wonder how that's going to, I think that affected the markets a little bit, didn't it?
Yeah, I mean, it certainly caused a bit of a sell-off. Yeah.
Okay, so on more positive news, there was some amazing earnings this week, like kind of mind-blowing. So we're going to go through a few. We're going to start with Google. I think everyone's probably heard about this so far, hopefully, unless you're living under a rock. But Google had mind-blowing revenue increase. Tell us about it.
Yeah, I mean, obviously their numbers were up. They were up huge, and they had a number of different areas that contributed. So it's obviously one of the bigger companies, one that everyone knows really well. Obviously, the ad revenue is a big part of that, and one of the concerns is the numbers were strong here this quarter, but with this new opting in and opting out of the advertising, what effects is that going to have going forward? So the market. It's great that the numbers were good in the past, but the market's always looking ahead as well.
It was interesting. I was reading up on it. One of the biggest movers this year was YouTube, which is where we're doing our live show. So thank you, YouTube. But the billions in advertising spent on, or the revenue streams from YouTube advertising, and just the increase in YouTube, it makes you wonder if it's kind of our next, instead of cable TV, we go to YouTube.
Well, certainly, if you look at a lot of the youngsters out there who are younger than us, I mean, that's what they're doing, right? Like, I mean, they don't even know what cable TV is. They watch everything on YouTube.
Hopefully they find us, Bruce.
Yeah.
There was another big earnings story, Shopify. What happened there?
Yeah, I mean, Shopify had amazing numbers that were out and moved the stock a lot the day after the earnings. So they made the earnings announcement in the morning, and that stock moved that day. And as we know, it has a huge impact on the TSX and what can happen with the TSX as far as index points. The TSX was up just under 1%, I think 94 basis points on the day. And I think that around 85 of those points, or not of the points, but 85% of those points came from Shopify itself. So without Shopify, it probably wouldn't have had nearly the positive day that they did.
Well, and I think his revenue increase was over 110%, if I got that number right, which is kind of amazing. I mean, is this all, everything that we're talking about as far as earnings, this is all pandemic related, right?
Well, certainly those two companies for sure have been, right? I mean, people are buying more online and shopping online, which is Shopify, and then they're trying to entertain themselves, which is YouTube.
Absolutely. Let's talk about Tesla. What happened with Tesla and earnings?
Yeah, I mean, obviously they had a huge number. The top line number looked amazing. You just looked at that, and they were up 70%. The revenue number was, and so everyone was like immediately, oh wow, this is great. But when you dig into it a little bit further, they had positive earnings, and when you dig a little bit further into it, you can actually see that the positive earnings came from kind of two areas. One is these regulatory credits, which I didn't look to see exactly what those are, but they're credits that are given. So it's not a cash entry. It's an accounting entry. And then the second thing was their gain from their Bitcoin position. And as we know, they've had lots of fanfare and media about the Bitcoin position. I mean, that contributed a lot. If you strip those two out, they actually had negative earnings, which I believe if you strip those two out over the last 7 quarters, they've had negative earnings. So they're contributing. And I mean, there's a lot of people who, on both sides of the camp here. It seems like it's a bit binary. Either love it and you're a raging fan, or you're, the ones that are saying this is, the kind of the next Enron, and that, the stock could take a huge drop at some point in time once the market actually not discovers so much, but like finds it interesting and timely that these things are happening.
Well, and it's really interesting for you to break that down, because I don't know if most people would know to look that far into the financials to understand what those revenues actually mean. Because 74% increase in revenue to me sounds like, that's a winner. But quite interesting to find out that it is so, attached to an accounting as well as, the purchase of Bitcoin. It also makes me wonder if they've tied their hands a bit, because if they really do start doing, better and actually generating some revenue from their business model, what happens if Bitcoin takes a turn and now all of a sudden it doesn't look appealing to them, but they're actually creating revenue? I mean, they've taken a bit of a risk there, don't you think?
Yeah, certainly it's, ventured away from their initial business, but, the revenue is still a lot from the car side of things. It's just how much they're paying out on the expense side of things. That's the difference, and that's where those two entries have actually come in and been able to make their earnings positive.
Well, it doesn't seem like Elon has difficulty spending money.
No, yeah, and he certainly has a lot of he's got raving fans and kind of worst enemies out there.
Well, I don't know about Kelowna, but in Vancouver, I'm always surprised how many Teslas there are. I just actually found out recently that his wife is from Vancouver, and I wonder if we're a bit of a testing ground for them. But in Vancouver, there's Teslas. Every other car seems to be a Tesla.
Yeah, it's the same way here. I mean, I think pretty much anywhere you go. I mean, obviously they've sold a lot of cars. They sold a lot of cars this quarter, and it seems like there's a lot of people waiting in line to get them as well.
Absolutely. Okay, let's talk about an interesting financing that happened with our company, Green Thumb Industries, Inc. They did a debt package. Tell us about it.
Yeah, I mean, what I found quite interesting about this was two pieces. One was the size. Obviously, it was a little over $200 million. So, anytime you start talking about that size of debt package, it's fairly significant. Gives them a lot of dry powder. But what I found most interesting was that in a sector, they're in the US, they're a US MSO, and in a sector that still doesn't have, full banking regulatory approval, which is the SAFE Act that we've talked about before, they managed to get sub 10% debt, which is really the first time that we've seen that. There's been lots of companies talk about working on those packages, but we haven't actually seen them till now. Historically, the companies who are issuing debt are having to pay up in order to do that. They're having to really incentivize the investors by offering them quite a high rate. If it starts to come down, that can be a real beneficial position for them for the cost of their capital and allow them to really grow at a faster rate because they're lowering that interest rate.
Well, I was reading up on it, and I don't want to quote it because I don't have the exact quote, but essentially that's what they were saying is when you're able to borrow money at these rates, it's super beneficial for the company. It's also great for shareholders because they're not being diluted, and allows the company to kind of create further growth without diluting the shareholders. So, do you think that we'll see more of this come to the cannabis companies?
Well, I know when we talked to quite a few management teams out there, and a lot of them are alluding to the fact that they're trying to negotiate sub 10% debt, and so I wouldn't be surprised if this hopefully will open a bit of the floodgates and allow some of these cannabis companies to raise money at or at least borrow at cheaper rates.
Yeah, absolutely. Let's talk about Valens. They were on the TSX Venture, so they've been shuffling a lot. And let's talk about the move that they're intending to make and what you think on that. So, Valens Growth, they were on the Venture, and in March of 2020, they uplisted to the TSX, and here we are, just a little bit more than another year later, and they are intending to uplist to NASDAQ. Tell us what you think about that.
Well, I mean, it seems to make sense, from a couple of perspectives. One is that, a lot of the US cannabis investors still can't invest in their own country. So they can't invest in some of the MSOs because of listing requirements. And in a lot of cases, it has to do with where those assets are held in custody as well. And some of the custodians won't allow them to hold shares on certain exchanges in certain areas. So this obviously gives Valens, or they at least perceive it to give them an advantage to be able to access some US money. With the fact that they also announced at the same time that they're going to be investing in a US CBD company called, I believe it's Green Roads, then, it sort of ties hand in hand that, they're going to work on doing an expansion in the US and CBD. And then, when it gets federally legal into THC, and they'll have a US listed, duly listed company. One of the obviously things that's interesting as well is that they're going to have to do, a share consolidation in order to meet the requirements for NASDAQ, which I believe it's probably the $3 US minimum price. So they'll have to do some sort of consolidation, and they're going to have shareholders vote at that in their May meeting.
Yeah, so this is interesting. So first I'll just mention Valens is in your backyard, isn't it?
It is, yeah. They're a Kelowna company.
They're a Kelowna company. I think it's kind of a neat opportunity that these Canadian companies have, that they can. So just to clarify, the reason Canadian companies can list on the NASDAQ is because they're operating in a jurisdiction that is recreationally legal, whereas it's still not federally legal in the US. It's just by state it's being decided. So it allows these Canadian companies to list in the US, US citizens who want to invest in the space. And let's be honest, I mean, the retail market around the cannabis space it's been amazing to see because people want to invest in it. I think it's something they can understand. It's sexy, and there's lots of opportunity there. So it's been an interesting opportunity for Canadian companies to be able to list in the US. But what we have seen is a bit of a trend that to meet the minimum listing requirements, we've seen companies have to do these consolidations to be able to list with them. Now, I looked them up. Today, they're trading around $3.50 Canadian. And I think the minimum from what I could see on the NASDAQ is about $4 a share. So it depends what's going to happen with the share price as they move forward. They might have to do that consolidation. Do you think that if they do end up having to do some form, I mean, it doesn't seem like it would be huge, but Is that unfortunate for the Canadian investors that they get rolled back and diluted a bit?
Well, they don't get diluted until they actually do an issue. The consolidation itself, it just is changing the size of the pieces of the pie. It doesn't change the size of the pie when they issue securities. So I'm assuming when they do a NASDAQ listing, they'll also potentially raise money once they're there if they don't do it at the same time. That's where the dilution potentially comes in. That being said, they have a fairly good sized cash position, so they might not need to either.
I thought I read somewhere, but I'm not sure. The other thing that we were chatting about a little bit is, the one value proposition the CSE really does offer is that we're kind of the most cost-effective source of raising capital. But these other exchanges are not cheap to list on. So, going from the TSX Venture to the TSX, then to NASDAQ, that's a lot of money being spent on listing, isn't it?
Yeah, both for the actual listing process, but then an ongoing, there's a lot of listing and public market costs associated with being on a certain exchange.
Lots of lawyers are getting paid, that's for sure. Okay, let's finish off. I'm thrilled about this story. So one of our CSE issuers, PlantX, they are a one-stop shop in plant-based diet. And they just brought on an ambassador, Venus Williams. I'm so excited for them. Congratulations, guys. What a neat partnership that you have. So I was reading up on it. The story is that Venus Williams, about 10 years ago, ended up with an autoimmune disorder of some kind and had to change her lifestyle to try and handle it, and went completely vegan. So she's been vegan for over 10 years. To join, a Vancouver-based company that's on the CSC just makes me so happy. And it's really neat to see. We're seeing some of these ambassadors. We started seeing some come in the cannabis space, everything from rappers to advocacy groups and all that kind of thing, everything in between. But what's neat about kind of the plant-based stuff that's coming to the markets is seeing the ambassadors that are coming, and it's all about health and wellness. And it's just so exciting to see her partner up with these guys. I had to look her up because obviously I know who she is, but just to look her up, she in total has been #1 tennis player for 19 weeks. 11 of those weeks was in singles, and 8 of those weeks was in doubles. I mean, she's amazing, huh?
Yeah, I mean, it's you couldn't probably get a bigger ambassador, bigger name, right? And then obviously for the company to have somebody who's such an advocate of that type of lifestyle and diet, it's obviously going to help them 100%.
So one question I had for you, and this I'm asking you this with your capital markets hat on. The cannabis space brought this. Now we're starting to see this in health and wellness. Is the ambassadorship really becoming an important element within the capital markets and as a public company?
Well, I certainly think it opens doors and gets opportunity to your company, right? If you didn't know about PlantX, well, now you do just from watching us, right? So, and we're just talking about the fact that she's come on board. It's the same with, institutional investors or retail investors. They recognize the name, and then they'll look into that company because they know that name. And it certainly just helps drive traffic and people's interest into a company, which of course can drive, buying and multiples.
Yeah, absolutely. And we live in a social media world, right? So it makes sense that people would go down that track. So congrats, PlantX. We wish you guys all the best. What should we think about going into next week, Bruce?
Well, one of the things that we've been tracking is, I know I talked about it a few weeks ago, is that we started to see this deceleration in some of the small mid-cap space, but now it looks like that was maybe a consolidation and it's starting to accelerate here again. So that's what we're watching over next week to see, is the consolidation finished and we're going to start to see a reacceleration, because if it does, obviously that drives markets a lot higher. And, as we turn the calendar into May, the saying is sell in May and go away, but we might see a melt up in May if we actually see that risk on come back into the market.
It's funny. Someone just said that to me the other day, that quote, sell in May. What is it? Sell in May, go away?
That's correct. Yeah.
I wonder if that'll happen this year because we still remain locked in our homes, and retail traders are still loving being on, doing their day trading and investing. So we'll see what happens this year. Thank you so much, Bruce. I do want to quickly mention that next week is the launch of the CSE Cannabis Investor Series. We put out a press release yesterday. We have over 60 speakers as part of this. It'll be a month-long series. We have some huge names. Bruce, you and I will be breaking down the theme every week. Next week, we're launching with US Week, which I know you have lots of opinions about. So, Bruce, we're going to talk about this next week. Thank you so much for joining me. Have a wonderful weekend.
Yeah, thanks.